Hi ladies and gentlemen, this is Game of Trades and this is going to be a technical analysis of the S&P 500. So the stock market continues on grinding higher day by day. We did have a breakdown of this downtrend line that we managed to trade on this channel, but we did bounce back up. We formed a small divergence here and bounced straight up past the resistance level, and we're continuing on to grind. We're making very, very small green candles, but they are in fact green. It seems like the S&P 500 has returned to a type of price action that is perfect for investment traders, very slow grinding up, and that is something that I talked about back here on my channel. I talked about the fact that if we did get a full impulsive breakout of this all-time high, that the S&P 500 would start the slow grinding again, and that I would start talking more about investment opportunities instead of shorting opportunities and trying to get a big correction. Now, of course, I am still always looking for shorting opportunities. That is how I trade a upgoing market, but mainly because I want to get good investment opportunities and cheaper prices to get in on the S&P 500. Now, what's currently going on in the S&P 500 is, again, we bounced and we are currently backtesting this trend line here that we originally broke. And we are doing so while building divergence. You can see the MACD makes a lower high while the price makes a higher high. This means that we're starting to lose momentum in this rally. It's only normal considering how powerful this rally has been. We are starting to see some divergence, so some loss in momentum. Very similar to what we saw here, a huge rally in the beginning and then divergence starts coming in. MACD starts weighing down, the price continues on a little bit higher, and then we get a bigger, more powerful correction. Now, this backtest can mean a potential reversal, as I said, but again, with the markets grinding and really having shifted in the type of price action that we're seeing, I really could see the backtest last a long time. Again, similar to what we saw here. We saw a backtest of the trend line for a very long time, you can see here. But when it finally gave off, it did give a pretty nice correction. So my thoughts on this current backtest is, again, I think we're going to continue on to backtest this trend line for a few days, continue on a little bit higher. Then we'll have a small correction, I reckon, probably down to this 33.14 level right here, and then bounce back up, make another all-time high, form some type of a wedge pattern, and then we'll have a more powerful correction, maybe back down to this level, but we'll see when we get there. And I'm going to draw it out for you with a nice little trend line, and you'll see what I mean right here. If you draw a trend line here with a reaction here, and you extend the divergence line here, you can see it forms a nice little wedge pattern. I'm going to make it thicker so you can see it, and right there, that's a nice wedge, and that would be the type of trade setup that I'd be comfortable with if we do start seeing this type of price action. And it would definitely offer some volatility in the market, so a good shorting opportunity for those of you looking to short the market, and a good buying opportunity for those of you wanting a cheaper price on the S&P 500. And again, this type of scenario would suppose the fact that this is the end of this big rally and that we are starting to lose momentum, which is what the MACD is telling me, and that we're likely to continue and extend this divergence, which is my personal bet. I think the MACD is going to continue on waning down as the price continues on higher, and then that'll offer a nice opportunity to short down. And yeah, that is very similar to what we saw right here. And this is not surprising considering this type of pattern happens a lot. You get huge rallies, then you get a loss in momentum, and then you get finally the correction. You rarely get the huge rally and then a correction right after it, unless of course you've got a fundamental problem or a news that affects the market. No, you usually get a loss of momentum, and then this is how the natural corrections occur. And considering it is time for a natural correction after this huge rally, I do expect some kind of wedge pattern forming, divergence, and correction. Now, this is a sketch, but considering how high it's getting, I doubt that we'll reach 3,500 points. Now, obviously, that's just speculation. That is just my guess, but so I could be wrong. Anything can happen, especially with good news that could send the markets higher. But if everything goes like it's going right now, I do not think that we'll reach 3,500, considering we have already started losing momentum. And you can see that's actually the case here. In the beginning of 2019, had you invested right here, you would have made huge, tremendous gains, 20% gains within under 70 days right here. And after that, once the momentum starts waning down, had you invested there, you would have taken 230 days just to get 7%. So really not an awful lot, and that's why I'm personally not investing right here. This is not a good idea. I think the prices are overbought. I think it's unwise to invest at the end of such a long rally. It's risky and much safer to wait for a correction, even if it's down to the 33.14 level, and wait for a bounce off of this level. And that could be a little bit smarter, but definitely not where we are right now. So that's about all I wanted to cover on this video. I hope you guys enjoyed. If you did, make sure to drop a like and subscribe if you haven't already. In the meantime, good luck on your trading and see you next time.